As of right now in live intraday trading on July 22, 2026, NUBURU Inc., trading under the ticker BURU, is trading at $0.038 per share, down 5.41% for the session after fluctuating between an intraday high of $0.044 and an intraday low of $0.0355 on a volume exceeding 5.7 million shares. Looking at a stock trading below 4 cents, the average trader checking their Robinhood app or reviewing their individual brokerage account assumes they are looking at a dying microcap doomed to go under. The market narrative insists that NUBURU is just another distressed penny stock pushed down to the OTC pink sheets after receiving a delisting notice from NYSE American. The reality unfolding behind the scenes is far more complex and unexpected. Just days ago, while the stock was hovering in micro-penny territory, NUBURU managed to close a massive $38 million public offering led by a New York single-family office. That transaction was priced at $0.1555 per share, which represented roughly a 30% premium over where the stock was trading. Even more surprising is that management immediately put that capital to work, wiping out nearly $16.75 million in debt obligations and clearing out convertible debentures that were dragging down the balance sheet. This sets up a fascinating tension between expectation and reality for anyone interested in online investment or self-investing. When investors evaluate growth opportunities through their Interactive Brokers account or look for momentum using Interactive Brokers trading tools, high-profile names like Tesla stock, Apple stock, or Nvidia stock usually dominate the conversation. Retail market participants using SoFi Invest, SoFi Active Investing, or Schwab Intelligent Portfolios often look at megacaps for stability. However, speculative capital constantly searches for deep turnarounds across popular investing sites. The baseline expectation for NUBURU is simple. A company that dropped from a 52-week high of $4.24 down to $0.03 is viewed as a high-risk trap struggling with massive share dilution. The market expects endless cash burn, potential bankruptcy, or continuous dilutive equity lines. The contrarian reality, however, is that NUBURU is actively execution-focused on an aggressive platform transformation. Rather than remaining a pure-play industrial laser vendor, the company is pivoting hard into a dual-use defense and security platform. They are integrating photonics, software, electronic warfare, counter-unmanned aerial systems, and defense mobility into a single unified offering. To truly understand what is happening with this stock movement, you have to break down the sheer scale of the recent price swings and capital restructuring. NUBURU was hit with a formal delisting proceedings notice from the NYSE American because its common stock dipped below $0.10 during regular trading hours. That triggered a temporary suspension and a transition to the OTC market trading. Normally, a move to the OTC pink sheets causes an immediate death spiral as liquidity dries up. Yet during this exact period, institutional investors stepped up to inject $38 million in gross proceeds. By utilizing those funds to pay off $15.5 million of principal on its December 2025 debentures and $1.25 million in acquisition notes for Liacon, NUBURU effectively eliminated the recurring amortization burden that forced constant share issuances onto the market. Retail investors managing portfolios on the SoFi trading platform, the Robinhood stock trading interface, or through Fidelity Wealth Management often overlook how critical debt elimination is for microcap survival. Clearing nearly $16.75 million in liabilities transforms the balance sheet almost overnight. If you are tracking this stock on the Fidelity mobile app or through your SoFi robo-advisor oversight, you should closely inspect the trading volume and market mechanics behind recent sessions. Trading volume has spiked dramatically, with tens of millions of shares changing hands daily as retail traders on Robinhood Investments attempt to navigate the volatility. The company has already secured shareholder approval to execute a reverse stock split. Management intends to use this reverse split to raise the share price above exchange minimums, appeal the NYSE American delisting determination, and regain full national exchange compliance. While reverse stock splits often carry negative sentiment among retail traders on popular investing sites, in this specific case, it serves as the necessary technical gateway to restore access to institutional capital and broader market visibility. Comment below how many shares of NUBURU you currently hold in your individual brokerage account, or if you think buying micro-cap defense turnarounds is too risky. To appreciate the direction NUBURU is heading, it helps to examine its business foundation and how its business model has shifted over time. Historically, NUBURU was established around blue laser technology. Traditional industrial lasers rely on infrared wavelengths, which struggle when welding reflective metals like copper and aluminum used in battery manufacturing and electric vehicles. Blue light wavelengths are absorbed significantly faster by reflective metals, offering faster, cleaner, and more precise welds. However, industrial capital expenditure cycles proved slow, and commercial adoption alone was not generating sufficient revenue to cover operational costs. Recognizing these constraints, the company initiated a multi-phase transformation plan. It expanded into dual-use applications by targeting defense, security, and critical infrastructure markets, where blue laser technology offers distinct advantages, including counter-drone defense capabilities and laser dazzlers. In the first quarter of 2026, NUBURU posted early evidence that this transition is generating top-line results. The company reported its initial commercial revenue, driven by product sales and professional services from its Lyacon acquisition in Europe, along with software subscriptions and maintenance services from Orbit. Additionally, stockholders' equity turned positive to $2.17 million, up from a deficit of over $15 million at the end of 2025. The ultimate focal point of this transformation is its pending agreement to acquire a 70% controlling interest in Tecne S.p.A., an Italian defense mobility and electronic warfare contractor. Successful integration with Tecne would provide NUBURU with established defense contracts, hardware manufacturing scale, and international reach. Recent testing under Italian defense frameworks demonstrated successful field results for laser dazzlers in counter-UAS applications, reinforcing the commercial potential of combining directed energy with electronic warfare. Investors utilizing self-investing tools, Robinhood Cash Management, or checking stock stats through SoFi stocks or Fidelity ETFs must weigh the clear risks against the catalysts ahead. The central risk factor remains execution and dilution. The recent $38 million offering increased the total share count significantly, which dilutes existing common shareholders. Furthermore, closing the Tecne acquisition depends on completing the Italian government's Golden Power regulatory review process. If regulatory clearance hits delays, or if the integration of Lyacon, Orbit, and Tecne experiences operational friction, cash burn could resume. On the flip side, if the Golden Power review clears, the Tecne transaction closes, and the planned reverse split successfully restores NYSE American listing status, the narrative surrounding NUBURU could shift rapidly. When evaluating this stock alongside broader market allocations, whether inside Fidelity IRAs, Fidelity mutual funds, or an intelligent portfolio setup, the contrast between expectation and reality provides absolute clarity. The market expectation views NUBURU as an exhausted penny stock, pinned under 4 cents on the OTC pink sheets, weighed down by past losses and exchange notices. The deeper reality shows a company that has retired $16.75 million in debt, secured $38 million in fresh equity capital from single-family office backers at a premium price, introduced new commercial revenue streams, and positioned itself to become an integrated dual-use defense platform. Whether you track market trends on the Robinhood app, research equities on Interactive Brokers platform, or look for investment help on top investing sites, watching how NUBURU executes its reverse split and defense acquisitions will be one of the most compelling microcap turnaround stories in the market. Disclaimer: this video is made only for educational and informational purposes. I am not a financial advisor. Any stock, crypto, or investment discussed here is not financial advice. Please do your own research or consult a qualified financial advisor before making any investment decisions. Invest responsibly. Thumbs up, don't forget to like, comment, and share this video to support the channel.